Remember that huge crypto crash that happened on October 10th, where $19 billion was liquidated? Well, the reason for that is coming out now, which might be related to index funds. So there's one major company that's in charge of assigning other companies into index funds. Because, trillions of dollars of money flow into index funds, which are just baskets of other companies. But this one indexing company, the one that decides who's in the index, are thinking that digital asset treasury companies, such as Strategy, for example, MicroStrategy, where all they do is buy Bitcoin. And there's a bunch of companies like this, about 28 of them. Well, they're now weighing the decision on whether or not to actually include these in indexes, and it's leaning towards no. Now, insiders probably figured this out early, and due to the fear that big companies like Michael Saylor's Strategy would no longer be included in some of the world's most popular index funds, well, the insiders probably sold off on this news. Now, what does that mean for us? It means that obviously we weren't insiders, but it also means that we should assume the worst and hope for the best. But assuming the worst, it does feel like a lot of that fear is already priced into the market. Now, they make this actual decision public on January 15th. But until then, this is one of the reasons that prices have dipped so much. People in the know are factoring in the fear of digital asset treasury companies not being included in mainstream indexes, which we don't need them. Honestly, if you want exposure to crypto, like Bitcoin, Ethereum, PulseX, just buy the coins directly. Do not worry about a middleman company buying coins on your behalf, which is just extra middleman risk and extra leverage in the up and down direction. So I wouldn't be surprised to see these treasury companies take a huge hit, especially if they're not included. But if you're looking for an ultimate turning point in the crypto markets, that January 15th date is one to keep an eye on.